What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Have a couple different things that I want to share with you today. The first is this article from Fortune Magazine. It says here, institutional homebuyer Yieldstreet slashes buying levels by 90% as it awaits a sharper home price correction. So this is what we talked about in one of my more recent videos with investors. The investors nationally have had a 30% decline in home purchases, and Yieldstreet would be one of those large investors that own between 100 and 1,000 properties, not one of the mega investors that own over 1,000 properties, but they're still a big player in the space. So there's a few different points in this article that I thought were very interesting. The first one I have highlighted here. From December onwards, the expectation from my side is we'll have another 10% to 15% decline in home prices nationally. This is Tejas Joshi, Director of Single Family Residential at Yieldstreet, so the guy who's in charge of purchasing single family homes for their company. But what I thought here was very interesting. They have this chart. U.S. home prices are falling for the first time since 2012. See over on the right, month over month decreases nationally. Then this is a chart that talks about where prices would go if we see a 20% peak to trough. They'd go back to around February, March 2021 levels. 10% peak to trough is October 2021 levels in national home prices. But that's not what I wanted to focus on. Those charts are interesting, and this link will be in the description if you folks want to take a deeper look at that. But let me see the paragraph that I really wanted to focus in on. This is it right here. I'm just going to read it because I think it's all great. Obviously, some markets will be less impacted. Markets that will be more impacted are ones where you have a lot of inventory of new homes, like Phoenix, Las Vegas, Dallas, and Boise. These are markets with a lot of construction, with a lot of new homes. Those are the markets that'll be the leader in terms of how much home prices decline. There will be some markets in the Northeast, like Vermont, like I've said on this channel, which haven't had a lot of new construction, where home prices are expected to fare better in terms of declines, which is what I've said. I've said many times on this channel. It's those markets, like you said, Vegas, Phoenix, like the things that we've talked about. They have a lot of new construction. They have a lot more inventory. Those are the places that are going to see a larger. They're, like you said. I personally believe what I forget his name already. Joshi believes that it's not going to be a decline, an equal decline across the country. That there's going to be some markets that are going to have a significant decline. There's going to be others that have little to no decline in this downturn. And I've said it with Vermont. I don't see a major housing market downturn, a significant one coming to Chittenden County at least. I've talked about the vacation markets, and I've talked about some other pockets of Vermont that are different. I mean, no market is the same. Even here in Vermont, I think Stowe is a little bit more vulnerable to a price decline than Chittenden County is. But that's not the only thing I wanted to bring up to you folks. But I did think that was interesting. I thought that's useful information to have from a large investment company that has a lot of resources to make their decision of where to put their money, where to invest their money. And like they said, it's not going to decline equally across the country. So the other thing I wanted to bring up to you folks is Michael Burry, who is the investor from The Big Short. If you guys are familiar with him, you might have seen this tweet already, but I wanted to talk about it here on this channel. So in his most recent tweet, this was 18 hours ago, he says, inflation peaked, but it's not the last peak of this cycle. We are likely to see CPI lower, possibly negative, in the second half of 2023, and the U.S. in recession by any definition. Fed will cut, meaning rates, Fed will cut, and government will stimulate, and we will have another inflation spike. It's not hard, right? So this is something that I talked about. I haven't brought up this point in a few months, and so I wanted to just reiterate it, that it is tough out there right now in the housing market, right? Inventory is low. interest rates are high. But if you if you're at all bearish about, or not bearish, but dovish about the Fed's rates, and if the Fed is going to stop rate hikes soon, then we should be close to the top of the Fed funds rate, of mortgage rates potentially. And if the Fed does end up cutting rates and the government does end up stimulating again, because we are in a recession and the economy is in a significant downturn, and people need help, and the government solves that help by injecting cash and liquidity into the system, it's that doesn't increase the supply of housing. I think there's, obviously, we talked about it right at the beginning of this video, there's these cities that have a ton of new construction that are vulnerable to price declines, but there's cities and counties in the country, and I personally think where I work here in Vermont, in Chittenden County, around the Burlington area, that the market, we've seen a large price increase over the past few years. And I think that inventory is going to remain tight because there's not enough housing for the people that want to buy them, even at these higher rates. And whenever the Fed does cut and the government does stimulate again, if that happens here in 2023, like Michael Burry, who predicted, obviously, the 2008 financial crash, is predicting will happen in the second half of 2023, then if that happens, the price of homes is going to start to go back up. It's a scarce asset, and when people have more money, and when money is cheaper to borrow, more cash is being thrown into the economy, the scarce asset that is housing will continue to rise. So, I know I talk to buyers all the time. There's a lot of people who are sitting on the sidelines who are waiting for a housing market crash, at least around here, who would consider buying now, but they want to see what's going to happen with pricing. And I really think if you are one of those people who are sitting on the sidelines right now, you really should consider that if that rates will come down, or that some sort of government stimulus will happen if we do enter into a recession, and that will really, in my opinion, has the potential to make prices go way higher. And I guess the way I see it, my opinion on the market is that, and I know I'm biased because I'm a realtor and this is my profession. I got a comment the other day calling me out on that, and I need to do a better job at mentioning that this is my profession. So I do have some biases here, but it really is, it's where I'm putting my money. I am currently in the market right now because this is what I think. I think it's more likely that stimulus will happen, or there'll be some sort of pivot, then it is that we will see a significant price decline here in my local market, here in Vermont, here in Chittenden County. And so that's why I am in the market looking to buy, even though rates are high, things are expensive, homes are expensive right now. But at the same time, there's just not that much supply. There's not a ton of new supply coming to the market, and things are going to turn around. We've been in a high rate environment for a little while now, and eventually things are going to turn around. Rates are going to come back down. A lot of experts are predicting that in 2023. We'll see what happens. We're going to watch the Fed diligently, and if anything changes, we're going to know about it. And I'm going to, if my view changes, I will let you guys know. But as somebody who's a home buyer right now, I think that it's now is a good time to buy. And if buying conditions improve as far as lending goes, or prices come down a little bit, there's a bunch of buyers waiting on the sidelines for that. There's a bunch of buyers waiting on the sidelines for rates to come down. And as soon as they do, as soon as prices come down a little bit or rates come down a little bit, there's going to be a flood of buyers into the market, which is just going to make things more difficult for you if you're thinking about getting in. Not that things are easy now, but that's just my opinion. Anyway, let me know what you guys think. Leave a comment in the description. I love hearing from you folks. I do my best to reply to everybody. Also, all my contact information is listed in the description. So if you're looking to buy or sell a home here in Vermont, I would be happy to help you. Other than that, I will see you guys in the next video.